I've forgotten. I need to turn the mic on when I go live. It's been a while. Morning, everybody. How you doing? Morning, Peter. FDNet. Morning, Neo. Compliments of the new year. Morning, Jules. Evil. Reverend. Barrier Man. Mumo. How are you all doing? So yeah, back. Another year. Here we go again. Right, just a quick look at the markets this morning. Indices. We are long DAX, not really any volume at the moment on the DAX, and no trades so far on the FTSE. We'll be taking a 5-minute ORB on that. We'll come back to those in a minute. So just wanted to start off with a quick sort of recap of what's gone on over the last 2 weeks. Obviously, I haven't done any streaming for the last 2 weeks while it's been the Christmas break. As you can see from, let me just draw the Christmas break on there, somewhere around there, aren't we? Where are we? 12th. When did I stop? Somewhere about there-ish. So obviously that's the sort of Christmas break, basically. As you can see, there's been a bit of movement, but the main sort of, if you like, part of Christmas, obviously the market didn't go anywhere, and that's why I don't trade over the Christmas period. Obviously all the positions that I had on had to still run. So over the Christmas break, I've banked 2.26%. I've posted those in the Discord group, the ones that I've closed out. Did a bit of DD control on Friday on the Aussie US. But the movement post Christmas break, if you like, has really not gone anywhere, as you can see on most things. So this is what I mean by the Christmas break is not a good time to trade. There's plenty of opportunities, and I closed out positions over the Christmas period, but it doesn't really tend to go anywhere, as you can see. Obviously, as you can see there, Aussie US, that's the one I did I've done 3 DD controls on this now. That's where we've been for 2 weeks. So that's where we finished. This is where we are. So nothing's really moved on them particularly. So what we're going to do today is have a good look through the news coming up. I'm not going to go over what's happened over the last 2 weeks because there isn't really anything. There's obviously been lots of news every day, but there's been nothing that is particularly impactive that has changed interest rate outlooks, inflation outlooks. You know, there's been a lot of talking head stuff with Elon Musk and things, but there's really not been anything impactive over the last couple of weeks. So we've had some news which has caused some big moves. This is basically slippage, basically because there's low volume. So we're kind of, it's a reset. If you look at the RSI dash, everything is totally flat. So any setups that you're in or were in before Christmas, they're all gone. So it's basically now we need to see if the market goes our way or doesn't and just deal with those positions as normal. There's a few entries that I've had over the Christmas period which are sitting in profit. Nothing particularly exciting really. So just waiting for stuff to move today and see what direction they decide to take the market in really. This week's news we'll go over in a second. Let me just quickly see what's going on with the indices. So I'll be taking the 5-minute ORB on the FTSE today. Very little volume this morning. Nothing much at all. So long DAX, FTSE's not really moving. We'll go through the news and then I'm going to go through every FX pair. Morning, way for better life. Shouldn't that be way better for life? I don't know. So yeah, basically what we're going to do is go through the news today, and I'm going to go through what my plans are basically for this year. There's a few changes I make this year. I'm spreading my capital out over different strategies this year, and I've got 1, maybe 2 new strategies that I'm going to introduce this year. One of them is still in forward testing at the moment, but I've got a new EA that I'm developing, which is going to be running those new strategies basically. So I'll go through those in due course, but today basically we're going to go through all the FX pairs, look at where everything is. I'm going to be actively trading the Zone Trader EA strategy. That's the wrong account. I'm going to be actively trading the zone trader strategy as part of my portfolio now, which is basically just position trading support resistance. So I've already done 5% this month in January on that account. And that is basically just a support resistance based or supply demand based position trading strategy. So I'm going to be going through that every day, because obviously it's just a case of every day coming in and adjusting the zones. So we'll go through that this morning as well. I'll also be doing that in the members streams. So I'll be adjusting these zones every day in the members streams. So if you're coming into the members streams, you'll be seeing me changing those every day because they need to be done on a daily basis. Yeah, and then we'll see where we go from there. We will have some ADR in a single digit if it keeps going like this. Yeah, excuse me. ADRs basically, you need to be a little bit careful. Where's my ADR dash? There. You need to be a little bit careful with the ADRs this week, because obviously we've come out of contraction, or we are in contraction. The ADRs that we were seeing here obviously are completely different here. So this 2-week period, if we're using ADR 10, which most people are, and which I am as well, you're basically not going to get correct readings for the next sort of week, really. ADR, the only downside to ADR is when you get a period of complete flat market, like we've had over the Christmas period, that ADR 10 figure will contract. You can see we've got some very, very small numbers on here. And that's because the market's been sitting there doing nothing over the Christmas period. As the market gets back to normal this week, we're going to see some big ADR numbers going in, because what will happen is the market volatility will return to this from here. And what you're going to see is when you get a day which is normal like that, it's actually going to be about 225% of the average daily range of the last 10 days. It's not, it's totally normal, but what it is bigger than the dead period. So ADR is a little bit less reliable to the beginning of January and coming out of summer trading months as well. So just be careful with, you're going to see like 150, 175, 200 ADRs hit this week probably. It doesn't mean that the market is extremely volatile. It means the market's just returned to its previous state, which is normal. So it will take a week or two for those to sort of normalize. So just be aware of that. Up to you if you want to keep trading ADR reversals. I mean, there's nothing to say that they're not going to, you know, that will be an ADR 225 now, but it will still revert. Yeah, if the market pushes, it's still going to pull. So the strategies will still work, except, you know, you're not going to be taking 225 ADRs. More realistically, they're probably just an average daily range, but previous. So just be aware of those. What happened to the hedging strategy? Which hedging strategy is that? Do you mean the one that we were doing in the members streams? That one? If you mean that one, that's still trading, still generating daily profit. I've done some further testing on this over Christmas, and I'm not actually convinced I want to run it live, because it has got some big dips at times. The problem with taking this type of strategy is it's an intraday strategy. You're turning into a position strategy. If you get in at the very start of a squeeze, you really get hurt. So I'm not sure about that one, to be honest, but I will wait and see. Morning, WizCheck. How are we doing? Morning, it's time. The old one using the MRAEA. I don't know. I didn't run it. There's nothing. I mean, there's nothing happened to it. It's still there. If you want to run it, run it. It's a good strategy. I ran it for a year and it made 130%, I think, or 8 months, wasn't it? I think I ran it for. Made a very good return, but very, very, very high drawdown. It's hedging, so you're always in the wrong direction. Therefore, you're always going to go into drawdown, but you're always going to bank. So it's nothing wrong with the strategy. It's just not for me. So it's a good strategy. Some people are still running it. I still get people contacting me every now and again with the market reverse alerts, running that hedging strategy, and it's doing very well. But it will also be in big drawdown, so you need to make sure you're on top of it. But back test it. Same with everything. Back test it. Run it. Nothing wrong with it. Everybody's got different levels of comfort, and for me, there's no point in running a hedging strategy alongside a position trading strategy, because what I'm doing is duplicating 50% of the trades. If I'm getting into hedges, I'm in those on position trading anyway. So, and also now with the way that swaps are, The hedging strategy, I don't think will be as effective if you're paying attention to swaps, because you'll only be trading in one direction. But if you're not trading in one direction using swaps, then obviously you are going to be getting into big drawdown because of costs. I don't think it'll be as effective as it was a couple of years ago, but still up to you. Try it. Right, so we're going to start off with news as usual. We'll run through the news, then I'm going to go through the zones, check what needs to be adjusted on those. I'll talk a little bit about the zone trading strategy as well. Morning, Virginia. So today is obviously first proper day back. Morning, Peter. There's not a lot of news today. We've got the CPI for Germany coming out at some point today. The CPI for Germany is released in states. There's 6 states that declare, and they're declared during the day. So you don't get the total CPI for Germany until the 6th state has declared, and they will basically come in throughout the morning. So you just need to keep an eye on this. Typically what you tend to find is each state is roughly similar. So once you get the first state declared, quite often the market will make a move. So be aware of that. That's coming out this morning. Usually we get that in by mid-morning, late morning. We've got services PMIs this afternoon for the US. Tomorrow morning, Swiss CPI is forecast to remain the same. That's the first big CPI news of the year. We've got construction PMIs and a load of other bits and bobs for euro and pound, but nothing particularly exciting. The services PMI is the first big one for the US tomorrow. That is at 3 o'clock, half an hour after market open. We're forecasting that to rise. We are forecasting a CPI bounce in the US, so potentially keeping that interest rate high. We've got the Australian CPI coming out as well, 12:30 on Wednesday morning. That is forecast to be going up, so bullish Australian dollar. The Aussie has been really trounced over the last couple of months. It's not done particularly well, as you can see. However, the Australians came out over the Christmas period and said if it does continue, and Aussie US is the obvious reason, if it does continue in this vein, they are talking about an intervention. It won't be of the size and magnitude that we see the Japanese interventions coming in at, but an intervention is an intervention. It will be a big spike. You'll undo 50% of that easy within a couple of days, probably, if not within a week. So there's that potentially on the cards. If that CPI number comes out as a positive, which we are forecasting, i.e. it's going up on Wednesday, that means they're going to need to keep those interest rates high, which means potentially decent bullish move. 4.35 is where we're sitting at with the Aussie. They have not changed interest rates yet. They're the only country so far that hasn't dropped interest rates. They are struggling to keep on top of that. It's not far away from where they want it, but they can't get it down. So if that bounce comes in, we could see a big move on the Aussie this week. So be aware of that. It's non-farm the week this week. So we got the ADP non-farm employment change as usual on the Wednesday, along with the unemployment claims. Then we've got FOMC on Wednesday. That is just meeting minutes, no press conference. Unlikely they're going to announce anything that we don't know already. So the FOMC is usually like that. Doesn't really tend to do anything. You never know. They could come out and announce something new. Bear in mind, Trump's coming in a week or so. And the Fed are going to need to adjust slightly what they the way they approach things, because Trump's a little bit more volatile than Biden was, and a little bit more controlling. So although the Fed has overall control over monetary policy, now Trump's going to be sacking people that don't do what he says. So would be interesting. It's an interesting year, basically. Well, interesting 4 years we've got coming up if he lasts that long. Aussie retail on Thursday. Then we go into non-farm payroll on Friday. So obviously the unemployment rate at the moment is forecast to stay the same. The Canadian unemployment rate is forecast to stay the same too. So what tends to happen on a non-farm payroll week is one of two things. We either get a very rotational week until non-farm. The market doesn't want to put any large orders in either direction because it wants to know what the market's going to do with the unemployment rate. Or we tend to get a move and then we get an undoing of that move when non-farm comes out. So we'll look for clues there as to what's going to happen with Friday's figures. But so that's the news this week. So it's non-farm payroll week, straight into a week of volatility, which is good. So we'll see what happens there. But yeah, that's all for news this week. It's not particularly exciting week for news, but we have got high impact news this week. So we will see what happens. One of the strategies I'm looking to develop this year is a news trading strategy, a scalping strategy. So I want to get down onto much lower time frames at the moment, because we are finding an awful lot of rotational markets. Last year was the worst year I've had. And the reason being is because we had multiple squeezes and multiple stagnation periods, and neither of them are good for position trading. So just highlights how much you need to diversify, which is what I'm obviously doing this year. So that's one of the strategies we're going to be developing in the members streams as well. So there we go. That's the news done. Morning, Peter. If I didn't say morning already. Puzzled trader, what's your take on Euro US dollar? Is it a fake bounce? I don't know. What's your take on Euro US dollar? Is what a fake bounce? What time frame are you looking at? Bouncing where? Not enough information for me to help you with that. Morning, JC. How we doing? So I'm going to go through all the FX pairs in a minute. But first of all, just going to readjust the zones after I've looked at the DAX. Okay, so DAX is hedged, short on the FTSE. So just quickly looking at these, obviously we've been in rotation for the last week while the market's been in that weird period between Christmas and New Year. Could go absolutely anywhere at the moment. If we look at it long term, we are bullish at the minute, but not particularly bullish. So I would say, obviously today it can go absolutely anywhere. But downside targets today, I'm going to leave it at 5R, which is the low from Thursday, not far off of the previous week's low and 2-week low and ADR. Upside is that area there, which is in a nice propulsion gap they've sold from previously. We may get a reaction at yesterday's high and Thursday's high double top. But I'm going to leave it at 5R. Eke in cautiously. Basically, if the FTSE breaks clean to 3 and 5, what I'll do is use that just to pay that off today. Got to get back into the swing of things, having not traded for a while. So we'll see where that goes. So I'll come back to that in a minute. Right, so zones. So the Zone Trader EA, if you're not familiar with it, basically is just an EA that allows you to trade support, resistance, supply, demand zones. It's a position trading strategy, so you can trade it on any time frame. All the EA does basically is when you hit the sell limit and buy limit button, it puts boxes there, and you basically put the boxes where you want to get in or out of the market. So for the downside, at the moment, I'm long, for example, on this Aussie dollar CAD. So I've got the average price there, which is pretty much we're at break even. So if we push up into these highs, I will be getting out. If we push down, I will need to get into an extra position. So all I'm doing with this strategy is basically letting the market just do what it wants to do. It's just going to swing high, swing low, move up, down. It's going to go from support, resistance, supply, demand. That's what it's done all its life and all it will ever do. So all this strategy does is wait for the market to go where it's going to go. When it goes there, I take the profit, I enter in a short. If that short doesn't work out, I enter into another short, average in and average out of the swings. That's all it is. So it's very, very simple strategy. All it relies on is you understanding what support and resistance and supply and demand is. So on this particular pair, we've got a demand zone there, or supply, demand, whichever way you want to call it. I really don't care whether it's above or below. People have different names for different things. At the end of the day, this is where the market moved from. When it gets back there, it's either going to hit the same orders and repeat itself and drop, or it's going to push up to the previous area they sold from. So it's either going there or there when it goes up. If it doesn't go up, it's going down. So I'm going to need to average in and change my price until it goes up. And all it is adjusting these zones as the market moves up and down and just taking profit and banking profit along the way. So just going to whiz through all of these. Literally, when the zones are in place, I'm waiting for the market to get to them. So if the zones are still in place and we haven't got anything to do, move on. That's it, basically. So I'm looking for the market to come back up and retest this high. I just adjusted this one this morning, actually, when I came on. It was up here. In fact, I'm in a short anyway. So so that area there basically is where I'm looking for it to push up to. If it comes down, I'm looking for it to come back to this previous resistance, turned support, and then to add more positioning into that. Yeah. So just going through each of these. I'm short on this one, have been short on it for a while. If it pushes up, I'm going to take an additional entry up there. If it pushes down, I'm going to get out the shorts there and go long. Aussie New Zealand, as you can see, looking for it to come and just missed. Look at that. No, I imagine that spread. So looking for it to push down into that area, I'll exit and flip long. If it pushes up, want it to take a short up there. So just that's all in play. That's all the same as normal. So I'm long, have been long for a while because obviously we've been doing nothing. So looking for a push up into this previous resistance or previous support. And I'll get out of the longs there. Got 3 longs on it, hasn't gone anywhere. So I'm just looking to exit basically and flip short in line with the trend. We'll add if we retest that weekly low. CAD Swiss in shorts at the moment. I mean, none of these really are much different to what they've been for the last week or so. As you can see, the market's not really gone anywhere. So there's not been a lot to do with it. But looking for a push down into this high. And then I'll flip long. If we push up, I've placed this one here because what I want to do is try and get 2 entries on before that high. So that high there basically is where I'm more interested in a bounce. It's either going to come off the high as a double top or it's going to come off the zone there. But I'm going to add an additional entry somewhere around there, and then I'll add another one up there if it decides to push. CAD Yen sitting around at the moment. I've got shorts on. It's not going anywhere. If we come off of these highs again, I will get a second entry on today, and then I'm looking for a push back down into that propulsion move. Swiss yen, same thing. I'm in long. Yeah. So when we get to that previous support, which we blew through, I'm looking for them to take that off. 2 reasons for that. Basically, it's a previous area we went through. This is also a propulsion gap. So I'm looking for either a propulsion gap bounce, a 50% retracement, or a resistance bounce. There's 3 confluences there. So I'm going to take it off there and flip short. Second entry will be placed up there. Obviously, if it comes down, I'm going to need to add a second position on. So this area here is all an area we've been buying from. So I'll be down there. Euro odd, I've got longs on at the moment. Hasn't gone anywhere for the last couple of days. So looking to add if we come back down into this area here, which is where we started the bull move. If we push up into this previous resistance here, which we broke through, turned into support, broke through. If we come back up to that, I'm looking for the sellers that drove this market down to re-add. So I'll flip short with them. Euro CAD, got longs on at the moment, looking to exit when we come back up into this resistance here. And then if that doesn't work out, we'll be moving up into that double top. Euro Swiss, I've got shorts on at the moment, looking for basically a retest of this low basically to double top. There's this accumulation break here, which we added to. So we know this is where the buyers are. So I'm looking for them to rebuy that level. So I'm waiting to get down there and then I'll buy it. If it continues to rally, I'll sell up at those highs, see if we can get a bounce out of it, and then I'll obviously readjust. So this whole strategy is based around looking at where you think the market is going to go and then waiting for the market to get to one of them. If it doesn't get to one of them, you'll readjust your plan, which is why you only need to do it really on a daily basis. Because if this does this for the next week, I just sit in it and wait. There's nothing else to do. If I see it going like this continuously, what I might decide to do is after a week go, right, we're obviously not got the legs to get there or there, so I'll readjust. But it's just looking at price action and where price is going to go. Price only ever goes up or down, and it only ever goes to where it's been before. So it's just, where has it been before? One of those 2 things is going to happen with 100% guaranteed, isn't it? It's either going to go there or there. It can't do anything else apart from sit sideways until it does one of those 2 things. Euro Swiss. So short on this at the moment. I think I got in short back here somewhere. Can't remember where it was, but yeah, if we push up basically into that area there, anywhere up here really, I'll be shorting. And I'm looking basically for this area here to be a target to the downside. I might adjust that up actually. Or shall I wait? It's a tricky one, this, because it's just gone nowhere for 2 weeks. So I think I need to wait for the market to decide. I'll let the market show me where it's going and then I'll decide after. Yen, Euro yen got short on at the moment. Looking for it to come and retest this area here. So first entry was down here somewhere. Second entry was in here somewhere. Third entry was in here somewhere. So that will be my fourth entry. If it does push back up into there, I'll be adding another position on. And I'm looking for a retest of that area there. Yen's very difficult at the moment because obviously we've got this thing with the intervention happening potentially again. So we'll wait and see. But stuck in them at the minute. Shorts on at the moment, looking for this little low here. This area here is where I think there's much more chance of a bounce happening, which is around about this entry. That doesn't really make me any money. So I'm looking to see if we can get a push down into this area here. So this accumulation break and retest is where we started that leg from. This is where I'm looking for the add from the buyers that made this move happen. The problem at the moment, obviously, is we're a new year. All of this stuff is all old price action. They closed all these positions out for Christmas. So everything really is reset now. So it's just a case of this week waiting to see which way they take the market and then adjusting accordingly and just a price. Euro US dollar at the moment, long. Next entry is going to be if it breaks last week's low for a long. Shorts up there. So this is a tricky one. This is the propulsion gap basically here, which is quite a big propulsion gap. And as you can see, after that propulsion move, all we've done is sell out of that propulsion and sit around in there. So I would say that was a profit take. This is the market sitting there doing nothing. So I don't think this is really a valid area of support resistance anymore. I think more likely we're going to find that we're going to start seeing sellers enter around about the origin of the move. So for me at the moment, I'm looking to get short somewhere around there. Which is kind of coinciding with that high there. So what I'm going to do is take profit on the buy when we get there. I'm going to start a short position. There's two nice resistance areas for adding if it continues to rally. But we'll see what happens with that one this week. Pound odd, we had the big move last week. So we had, this is the week, the Monday, no, when was this? This was 2nd of January, open. Market absolutely collapsed. Big, strong move on the Aussie, basically. So, so at the minute, I'm long on this one. So I got in long here. And I'm looking for them to come up and retest that area there. The actual obvious spot is the gap fill. So that is your gap there. So that's the obvious space to start looking for short positions. But if we push down, obviously I'm looking for an additional position. So this is a double bottom, W pattern. We've got further resistance support coming up below there. So obviously it's just sitting there doing nothing at the moment. So we'll wait and see what the market does. Got out of this one today. So on this strategy as well, I am using the swap filter. So what I am doing, if you look at the P&L on this, I've been running this for the last 4 weeks. The P&L on this, the areas of drawdown at the moment are on the swap positions. So anything that is high swap is starting to cost because this is a position trading strategy. So I am only going to trade in line with swaps with this one. So you can see here we took profit on Friday on that position. It didn't get in short because the swaps are too big. So it didn't take that short entry, which is exactly what it should do. So for me, I'm looking for long only. If we push back down into those lows, I will go long. Simple as that. I don't need a short target because I'm not going short anyway, and I haven't got a position on. So for me, that one at the moment, I'm just looking for some kind of entry down for a double bottom. If that double bottom fails, I'll be looking at areas of interest somewhere else. So I'll be in there probably looking. That's the obvious area of resistance, support resistance. So I'll look for a second entry there, etc., etc. So all it's doing is saying, right, we're in now. I want to get in long on this at some point. So I'm going to get in long if they come and try a double bottom. If it goes like that and goes without me, I'll then move my box up there tomorrow. And then see if we come down and double bottom at some point. So I'm just looking to try and get in on a double bottom bounce. If we get a big propulsion move, then I'll move it up and see if we can get a retest of the propulsion gap, that sort of thing. So just looking to try and get in at the moment, but I don't want to go short because the swaps are too expensive. Pound Swiss, I'm in short at the moment. I've only made this change, by the way, last week. So you'll see me in some shorts where the swaps are bad, like this one, which is in profit. So I'm just going to close that, to be honest. I'll be looking to get in long if we come down and retest this area here. So I can get rid of that short box because I'm not going short. So this area here, yeah, area of interest, accumulation, break, retest, retest, retest. Yeah, so if we come and retest this area, they're buying this area, and then I'll look to get out on highs. Pound yen, I've got shorts on at the moment. I had an exit on this. Should have taken that. God, the swaps are so expensive on this. I'm just going to pull back down to that double bottom. If I can get that today, I'll take that. Just one out of that really on a short. Pound New Zealand. Swaps are bad on both directions on that. I'm just going to close that. I don't really want any on it. So leave that one for the minute. Pound US. Got longs on at the moment. Yeah. So looking for a double top sell. This area here is potentially where we're going to bounce from. This is the origin of the move. So if this is a legitimate move, they will be adding additional positions in there. However, that's too close for me to exit. There's no point in me getting short there. Although the swaps long are bad, so not that bad though. They're only 560. So I think there's a good chance of a bounce out of there, but I'll give it today and see where it goes. If it doesn't bounce there, it's going to come and retest that double top, and that's a nice little profit. So I'll look for that. I'll just leave that as it is for the minute. New Zealand dollar CAD, I'm in long at the moment. So looking for an exit at that high. Going to be watching this area as well here. Yeah, so this is a previous area. Accumulation, retest, 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 broke it, retest, 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 broke it. Looking for a retest there. However, that's not far away. So if we do get to there and the sellers are not there anymore, we will be popping through to take the liquidity at that area. So I'll be getting in there, or looking for a bounce at that area basically for orders. New Zealand Swiss, got longs on at the moment. Looking to get out on this area here. And New Zealand dollar yen. Got long on this at the moment. It's in profit. It's just can't get anywhere. So it's long. I'm just going to stick a break even on this because I've been in it for. Actually, I'm going to need. Oh no, swaps are good. So yeah, I mean this is earning me swaps sitting on this. So I'm just going to hold this. Look for it to get up into those highs. So there is a possibility of an intervention move on the yen, but we'll wait. We'll have a look at that in a minute. New Zealand dollar, US dollar, got longs on, looking to get out of this. Very big distance between these two entries because of the propulsion move. So really bad average price on this. So I'm looking to see if we can retest this accumulation zone. We started a move down, we broke that low, and we sort of sat around there. So we know that this is where the sell move started, and then it collapsed on the news. So this area here is potentially where we may get an add. If not, that's where I think we're going to add. So I'm trying to get back up to there, but quite a long way away on this. What I may do with this one is just take a loss on it. It doesn't matter which direction I go on this one because the swaps are fine in either direction, but I'm not convinced about the New Zealand dollar strength at the moment. So what I'm looking for this week is a weak US, hopefully, and that will get me out of that one. Got sells on this, as you can see, been sitting around for weeks, looking to get out on that accumulation. It may well bounce here, but that doesn't help me. My average is there, so I'm looking just to exit this because I've been in for too long. US dollar Swiss shorts at the moment, so looking for a retest of those lows. Again, just want to get out of that one. And US dollar yen, got shorts on, very expensive. Just want out of this as well. But obviously, you know, this is the problem with Christmas. You just get stuck in stuff. If you're paying swaps, it just costs you money. So nothing you can do with it. But anyway, so that's the positions I got on at the minute. So we'll recap those every day and see where we go. Peter, the zone needs to be run on a VPS as I close my MT4 platform and after the zones have gone. Yep, does need to be run on a VPS because it's got to be running all day long, 24/7, isn't it? Otherwise, how can it take trades? Yeah, there's no point in setting up zones and then shutting your terminal because it can't take trades, can it? So this is my VPS you're looking at here. This is my server. Now I've moved everything. Okay. Yeah, it has to be running on a VPS, obviously. Otherwise, it can't trade. So there we go. That's the zones done. There's some ADRs coming in already. Look, this morning. So this is, you know, what I mean by be careful with these. All these ADRs, look, 39, 36, 43. That's not the average daily range of the Australian dollar. It's just the average daily range at the moment because of the contraction we've had over Christmas. So just that's obviously Euro US dollar, but you know, we've had contracted markets. So these ADR hits that you're seeing are not necessarily going to be ADRs. So just be a little bit careful of them. Right. Are you not worried about margin calls from multiple squeezes on the zone trader? Yeah, I'll just add more money. It's position trading, Tom. So there will be drawdown control done as well. So, but you know, unless you need to do drawdown control, there's no point in doing drawdown control. If you're trading in line with the swaps, and it's very low risk as well, that account. I'm only trading 0.1s on it. It's not a big risk. So trade small. If you're not going to trade small, if you're going to, like, I'm trading every pair at the moment. I may well reduce the number of pairs that I trade, but I'm trading every pair at the moment. So, but I'm trading with tiny risk. So, I mean, you kind of ignore this number because I just stuck 25 grand in for the minute. But obviously there's way more capital available to put in there. So I'm not paying any attention to this percentage wise, really. It's about going from zone to zone. The profits are not going to be targeting. You can see there I did 4.7% on a day. If this it's about getting in and out of the market based on zones. It's not about targeting percentages. If it's going to a zone and that zone's going to make me 25% return on the account, that's what I'll make. It's not the same as the position trading strategy with RSI because it's not using indicators. It's using zones and levels, which is a different strategy altogether. CAD yen ADR, we got some movement on the yen this morning. Weakness in the yen by the looks of things, or is that strength in the CAD? No, it's weakness in the yen. So weak yen again today. Don't think I've got any yen on. No, I'm not trading yen. So a little bit looks like weakness in the US dollar as well because weakness in the US dollar as well this morning. So yen and US on the move to the downside. So we'll go through all the pairs. In fact, I've just gone through all the pairs, really, haven't I? But anyway, we'll go through all the pairs and just have a look at where everything is as well this morning. Let's have a quick look at the indices where we're going. Nowhere. So we've broken short FTSE. So we're retesting the opening range at the minute. That's also yesterday's low. So what we've done is we've broken out of this pullback during New York on Thursday and Friday's low. So if we do break this level, that's our next accumulation that we're going to add. We're going to aim for. So it's either going to be that weekly high or the accumulation before Thursday's open. So the targets are brilliant today to the downside. It's just whether or not we got sellers on board. So if that does break short, I don't see why we shouldn't come and test ADR today. But we will see where we go. Evil, I see you trade the zone in both directions regardless of the spread. Swap, you mean? Yep. Happy New Year, Mark. So yeah, I'm not doing that now. I was doing it mainly because I just wanted to, because obviously it's a fairly new EA. I wanted to, I've done loads of back testing on it, obviously, and forward testing on small time frames to just make sure that it works. But that's the first live account I've put it on, so I wanted to test it was working properly, the logic in both directions, which is why, and unfortunately I've got myself into some drawdown on some, but anyway. But yeah, so it's a case of really just going in line with swaps as usual. Anything that is swing trading. So basically my rule for swaps, paying attention to swaps. If it's a position trading strategy, that's a must. You've got to be paying attention to swaps. If it's a swing trading strategy, you've got to be paying attention to swaps. So if you're trading anything on the hourly timeframes or above, you need to be aware of this. If it's an intraday strategy, it's irrelevant because you don't pay swaps on intraday trades. So anything that I trade intraday or is looking to exit end of day or end of week, I'm not really bothered about swaps. So hence why I'm going to be developing and trading other intraday strategies this year, as well as the ORB stuff. I'm looking to do some more futures because I got funded over the Christmas period with Top Step again. So I'm looking to trade a little bit more futures, just as a kind of buffer, if you like, to get that diversification in. But we'll be covering more of that in the member streams, what I'm going to be doing with those type of intraday strategies. So Charlton, morning. For the position trading EA, what would you say is a minimum recommended balance? There's no recommended minimum. If you're going to do drawdown control, which you should be doing, you're going to need a minimum of 3 to 5k because you've got to be taking a 0.03 because you can't do drawdown control on any lot size smaller than that. Just bought the SIH before the lead intervention. What? The lead intervention. I don't know what that is. But I mean, I had somebody contact me over the Christmas break, and it was contacted me quite a few times over the Christmas break, like conversation wise, in Telegram. And the conversation goes along the lines of this, and I have this conversation almost on a weekly basis with people. What's the minimum balance for this EA? What can you afford to trade with? I haven't got very much money. Okay, what's not very much money? $100. You can't trade with $100. Can you do me a discount on the EA? No, if you can't afford the EA, you can't trade with the EA. What's the point in buying the EA if you can't use it to make money? Oh, yeah. And I have this conversation all the time. If you haven't got somewhere between 5 to 50 grand in your bank that you can trade with, you can't trade. That's it. If you've got 5k, that's a good starting point. But don't expect to make more than 500 quid a month. Yeah, that's all. You're not going to double that. If you want to double an account from 5k to 10k, go and use prop. Yeah, and do that as many times as you can until you've got 30 to 50k in your account. and then use that to trade with as your own capital, and forget this crap with all these rules. Yeah, that's the realist. You know, there's nobody out there is using $100 or $1,000 and turning it into six figures. Don't care how many videos you show me on YouTube, how many fake gurus tell you they can do it. You can't. Yeah, you might be able to do it once, and I also can walk into a casino and go red, black, red, black, red, black, get it right 10 times using martingale and walk out with 50k. But how many times in your life are you going to do that? Once, if you're lucky. It's equivalent to winning the lottery. So unless you've got capital, you can't trade. This is a business. If you want to start a business, you need capital. If you want to start a shop on a high street, you need 50k. If you want to buy stock, you need 50k. If you want to employ somebody for a year, you need 20 to 30k. Yeah, before you've even started, there's 130k outlay before you open your door in a shop. Why do you think people think they can come into trading and use $500 to suddenly earn a living? It's just not going to happen. Not possible. So there is no recommended minimum balance on any EA strategy or anything you do in trading. It's what you can afford to lose. If you have $5 in your account and that $5 was stolen from you and it wasn't going to affect your lifestyle, you've got $5 to trade with. If you've got $5 in your account and if someone stole that $5, it would be the end of your world. You haven't got $5 to trade with, because 90% of people lose 90% of their account in 90 days. Fact. I've done it many, many times, and so have you. Everybody has, haven't they? That's part of trading, losing accounts and blowing accounts. And you learn after a while that unless you're getting in with micro sub 1% risk per entry, you're probably not going to make it. So you have to adjust your expectations to what you can afford to lose. And if somebody like in Telegram contacts me and says they've got a $100 trading account and they're looking to buy an EA for $100, my question is, how are you going to use the EA? You can't, can you? It's just the way it is. Anyway, sorry, that was a waffle. First waffle of the year, done. Right, so current positions on at the moment. These are from previous, before Christmas, Aussie US. So at the moment, it's going nicely my direction. I did some DD control on it on Friday because I took another position. This has been stagnating for a while now. Go on, Aussie US. So I'm looking basically for, you see my average is all the way up here. It's miles away. But I'm basically looking for this to at least come back up and retest that area there. If we can get there, I will probably close it out and obviously just take the loss on this one because it's stuck. So when I got in all the way back here, we basically stagnated for around about 3 weeks. We moved down ever so slightly into a grind for a week. Then we had a bit of news and now we sat around for 2 weeks. So there has actually, since I took that initial position, there has been 1, 2 moves. Yeah. So we've sat through there, and this is why swaps are so important now in position trading and swing trading, because if you have to sit through that with a position on, it's going to cost you. Yeah, if you're paying $30 to $40 swap fees on it, it's going to cost you a lot. If you're paying positive swap fees on it, who cares? Yeah, happy to sit in it. But obviously this has just sat around for when did I get into this? November the 11th. So this has sat around now for nearly 2 months. And we've had 2 moves out of it. So I'm looking basically for an exit. I just want out now. I've taken 3 drawdown controls on it. I've also taken some profit here. So I took some profit off as we were sitting through this stagnation period. So my exit plan is really there. But I will see what happens with it. At the minute, it's in 1.8%, which is not the end of the world. I've banked 2.2 this month so far. We're only on the 6th of the month, hasn't really started yet. So if I can get this to a point, if that P&L basically becomes positive, I will probably look to do DD control on these oldest positions using some of the profit from these positions which are working out, and then I'll get this average down and see if I can make some decent profit to get the drawdown back on it. But it's a dead trade because it's just stagnated for weeks. The other Aussie New Zealand, Been in this one for about a month. Stuck. It's just not going anywhere. So it's very similar. We've had a news event, a week of stagnation, a news event, a week of stagnation. It's just not really going anywhere. Market structure is obviously bullish. Got low, high, higher low, higher high, higher low, higher high. Looking for a higher low at propulsion, and that will probably be my exit. Again, just one out of this month in. It's not in any drawdown. It's just not going anywhere. So just want to get out of it really. Aussie, basically, there's a possibility of an intervention from the Aussies. I think what they said over the Christmas period about possible intervention was more stop selling the Aussie to the market, and the market seems to have paid attention. So I don't think necessarily they'll need to stick an intervention move in. I think they've altered the course by just saying that they may do it. And we've seen that with the yen in the past. They've said we're going to intervene, the market panics and it buys the yen. So we'll see what happens. This week, obviously, today is first real day back of trading. So I'm not going to make any decisions on anything until the market has shown its hand. I've no idea where anything's going at the moment. So it's a case of sitting there and waiting. Aussie dollar CAD. Longs on this one, very similar. I've been in this for since the 18th of December. Accumulation, news event, undid it. Resistance bounce, looking for it to push. But market structure at the moment, we've got this gap fill here, which is debatable. I don't think we have filled that gap. But yeah, looking for a push up into propulsion, basically up to there. Pound odd, I've got on at the moment as well. So the first entry went in on Thursday on this. I've got two entries on that. Oh, it's an ADR. Okay, yeah. So this was an ADR hit and an RSI extension. So it's a double entry. I'm just going to take one of those off. I don't want both of those on. So yeah, so just looking for a propulsion gap fill on this one. So target, that's the gap from the open after New Year. So I'm looking for them to come and basically fill that gap. Target up there. Pound CAD already underway. Just not enough money to bank at the minute. So we are pulling out propulsion at the moment. So we've got this resistance. So they're selling the propulsion move from last week. So this could be the start of a structure break back down. Obviously high, low, lower high, lower low, lower high. Could be going that way. But we'll wait and see what happens with it. Again, want to just see what the market does this week. Obviously the pound at the minute, bullish. We're not changing interest rates. So I don't see any reason why we should drop dramatically on the pound, but we'll have to wait and see. Again, it's always tricky the start of a year because you've got no idea what's going to happen this year, news-wise, monetary policy-wise. Everything kind of starts with a clean slate. All the indicators are reset because we've had nothing happening over Christmas. So always best, if you're in positions, you know, at the end of the day, there's a 50-50 shot. It's either going up or it's going down. If it goes up, I'm going to take the money. If it goes down, I will deal with it. If it goes down, I'll be kind of one extra position in than I should be, which is not the end of the world. So just going to sit in that for the minute and wait. New Zealand CAD, that one I've got 3 positions on at the moment. Again, got into that before Christmas, 18th of December. Looking for that, as you can see, and just sat around and accumulated for the whole time. We've had a move down and a move back up. So I'm looking basically for this to be the peak formation low. We've got a double bottom bounce. We've made a new high. So market structure is shifted back up. Potentially we're looking for that kind of movement. The opposite is going to be that this is a pullback short. One of those two things is going to happen. So I'm long at the minute. Fundamentally, there's no advantage on either of those, so we'll see where the market takes them. New Zealand dollar, US dollar. Longs back up into propulsion. I've got 2 entries on this one at the minute. It's in profit. I'm just waiting for it to move. That is my ultimate target. However, the EA is set to close out at 1 ADR, and 1 ADR at the moment is 38. So the EA is automatically going to close me out of this one if we get here anyway. So probably in that propulsion. Yeah, so I'm very close to target on this. If we hit that propulsion gap today, the EA is going to shut that for me anyway. Targeting 1 ADR. And US dollar CAD on its way down. So single entry on that one from all the way back there. So again, just sitting in accumulation. Next entry for me is going to be below that level. So we're either going to buy this low up again or not. If we don't, we're probably pulling back down somewhere into there or here. So second entry will go on somewhere in that area there, and then third entry there, and look for a bounce. But what's going to happen with the US this year? Trump. So we've got the Trump effect in play now officially. If you haven't traded through a Trump presidency, basically it's all about X. So he and Elon will make noise and the market will move. And then the market will either trust what has just been tweeted and continue to move, or it will undo the move. When I traded through the Trump presidency last time, what we saw with the US dollar was a lot of that, and 90% of them did that within 24 to 48 hours. Because Trump doesn't have that's exactly a Trump play, that. Trump doesn't have a volume switch or an on-off switch. He just says stuff. And Elon, as we know over the last weekend, with what he said about Nigel Farage, is exactly the same, it seems. So he'll just come out and go, change my mind. And the market will go, oh, have you? And then they'll go, but that doesn't mean that, does it? No, okay. And all you do is you get that knee-jerk reaction, which is usually panic selling or buying, which is getting out of positions because you're unsure of what's going to happen, and then actually getting back into those positions because it doesn't mean anything. Occasionally something will be said like, we're going to jump out of NATO, and then the head of NATO comes out and says, but you signed into a 4-year treaty. But if he says we're going to jump out of NATO, and then NATO go, your renewal is up in 6 months' time, is that your intention? Yes, that will happen. Yeah. So you're going to find that the market for the US, and indeed every currency over the next 4 years, is going to be a lot more volatile and a lot more spiky, because that is generally what happens. I say that's what happens. That's what happened last time. What happened last time doesn't mean it's going to happen this time, but the world is more socially media sensitive now, and obviously now you've got the guy owning the platform in the government. It's going to be one of those years. So anyway, ADR reversals during the Trump presidency were phenomenal. So if you get ADR reversal entries with the market reversal alerts EA or the position trader EA, you're going to find they're going to work very, very well probably. But they are scalping strategies, so I may look at introducing those. But yeah, that's about it really for today. Has anybody got any other pairs or anything else they want to look at or discuss? If you do, let me know. Members stream tomorrow. We are going to be looking at Edgeful. So this year's plan is to put together multiple scalping strategies using a new EA that I've got, which is a portfolio kind of strategy EA. But it's designed to kind of a little bit like a prop EA, but it's designed to basically, I've got it running here actually. Ignore the figures. It's not actually trying to make money. It's just testing functionality. So ignore that. That's not what it does. This is a bare bones test. So what it's designed to do is to monitor the market and basically extract money in portfolios. So it grabs bits of cash, pockets them until it's hit a target, got a net P&L, and then it flattens everything. Then it starts again the next day. So I've got lots of strategies I'm going to build around this EA. So tomorrow we're going to look at Edgeful and look at some of the parts of Edgeful that are useful. 99%, if you've not heard of Edgeful, it's basically a statistics platform, and they publish a load of statistics which are absolutely useless in themselves. Yeah, so I can tell you that the opening range breakout happens 33% of the time as a clean break. How are you going to use that information? It's utterly useless if you don't know how to use it, and that's what Edgeful does. It gives you a load of useful information that you can't use. So what we're going to do is we're going to look at the parts of Edgeful that are useful, which are statistics we can build edges around. There's not many of them, so it won't take long. But I used Edgeful years ago, not years ago actually, last year. And I was in a trial for a month. I continued to renew it. And I went through the whole platform basically looking to build edges out. I tested some edges. I couldn't find anything that worked. But I was testing higher time frame edges, and I was testing stock index statistics. For that, it was useful. So there's a couple of areas which are really good in Edgeful to do with forex, which are session continuation edges, which can be up to 80%, 90%, and RSI extension edges, which are number of bars extended on RSI. So what I call an embedded RSI. You probably heard me use the term before. So there you go. That's a good embedded RSI. Yeah, so embedded RSI statistics. What I found when I tested this before was you can use ADR for the same thing. If you get embedded on the RSI for multiple candles, typically you're pushing hard. If you're pushing hard, you hit ADR. So realistically, they actually give you a very similar edge to ADR reversals. But it's an intraday strategy. So if you drop down to lower time frames and look for 15-minute RSI embedded extensions, like yeah, I mean, there's multiple ones actually. So there's an embedded section, which is there, and there's that's not embedded, that's a V shape. That I wouldn't class that as a strategy. Yeah, so that's really the only one that's an embedded. So what we're looking for is basically an embedded RSI that doesn't spike back down. So it needs to be above a level for a certain period of time. And there are statistics which give you averages. So what we're looking for is to build a strategy around average RSI extension. And again, it's something I've looked at in the past, and it has got an edge, but I haven't been looking for any stop loss based edge strategies, which I am now. So what's the URL? Google it. Edgeful. Did you do Swiss yen? No. So I'm just waiting for a place to come up on my class this evening. My exercise class. When you go to the gym, yeah, if any of you go to the gym, January is murder. You can't get onto classes. You can't get in the gym. And if you can get in the gym, you can't get on any equipment because the gym's full of people that are, I'm going to be a new me. It's like, well, you're only going to be a new me for about 4 weeks and then you're going to be the old you. So why don't you just not bother doing the new you and let us that do it every year, year in, year out, day in, day out, just get on with it. Rant over. Anyway, so I couldn't, long and short of it, I couldn't get onto my class last week because obviously everyone went, I'm going to get fit in January, and they booked it within minutes. So yeah. Did you do the Swiss yen? Yeah, no, I haven't. So Swiss yen, at the moment, I'm not interested in any swaps, any shorts. Swaps, shorting yen pairs at the moment are far too expensive. So it's coming up to a very decent level at the moment. If you look at it long term, there's my last entry there. Look, if you look at it long term, we are kind of rolling over. So got high, low, lower high. Potentially that's the move, but obviously the market always wants to long it because it's a swap. It's a carry trade. So you get paid for longing this. You have to pay to short it. So there's always more upward pressure than there is downward pressure on it. So right now, it's got this propulsion gap, which we filled. As you can see, this propulsion gap here was caused last week by the drop. So it's these 3-hour propulsion gaps there, which broke that low. So where we are here at ADR today is, or somewhere between ADR to 150 ADR, is a decent area. You may well find that they start a new selling. As a backup, if you get in there, second short would be obviously the double top high. But I wouldn't be interested really in longing this. So if we, let's just have a quick look. So we've got some of the PMI figures coming out. Oh, PMI, sorry. Yeah, those are the PMIs for Germany, 51, so about forecast. I'm just seeing if any of the German states have declared CPI yet. Doesn't look like it. Not yet. So yeah, if you look at the Japanese overnight statements, just seeing if there's anything relating to FX. No, there's no point in searching for FX. No, there's nothing in there. So ADR on the pound yen. So yen very weak today. So basically, if you look at the US dollar yen at the moment, the 150 level is the level that we're always interested in, because that was the previous intervention level. Yeah. Which is where we got that last reaction. New Zealand yen ADR. So very, very weak move on this yen. We are above that 150 level at the moment. If we get near there, the Japanese are going to start screaming and shouting about intervention. Yeah. So I wouldn't want to be longing this for two reasons at the moment. Well, actually, I would want to be longing it from a swap perspective. But if we get up to these highs, there's a high probability, I think, that it will do another intervention. So if you are going to long this, you're going to get paid on it, and it's probably going to be easier to get quick scalps long out of it than not. However, if they do an intervention, you're going to be stuffed. So I kind of want to be short on it from an intervention perspective, but I want to be long on it from a swap perspective, which basically means I can't trade it because I have confliction in myself as to which way this thing's going to go. The fact that we're getting so high on this, if you look at where we were, let's draw the intervention level in. Pretty much spot on. That's not bad, is it? So if you draw the intervention level in, yeah, as you can see, that is where we like to sell from, because that is where the Japanese start screaming and shouting about the cost efficiency of trading with Japan. And that was the last intervention. We are above that level, but that was the last intervention. That was the previous 150 intervention. So we are getting to the point now where we are getting very, very close to where they pressed the button and did that massive intervention. They moved further in a week than they have ever moved in history with that intervention move. If it's not working, they're going to do it again. I'm pretty sure. So any yen pair that you trade, like the Swiss yen, you need to keep an eye on the US dollar yen. If the US dollar rallies, yeah, it's going to rally against the yen, obviously. So if we get positive news on the US dollar this week, if we get decent FOMC saying that interest rates are going to go up or they're going to stay the same, if the CPI numbers bounce, if unemployment rate drops down, it's all going to push. If it pushes, the Japanese are going to get scared. So if that happens, anything you've got on something like the Swiss yen, you want to be going that way. But if you're getting a go that way, it's going to cost you money. So if it does push up into intervention and it takes 4 weeks to get there, you're going to be in so much drawdown by the time you get there. It's going to be incredibly painful. However, when it pays off, it's going to pay off. So at the minute, I just am struggling to trade yen. I've got the trades on in the zone trading account, but I've got kind of hedgy trades on those at the moment. I will be flipping short only on it. Sorry, long only on it. But I'm torn at the minute. One of the things that I'm unsure about, and again, we're going to need the market just to play out this year and tell us what it's going to do, is whether or not they are trying to continue this carry trade on. It looks to me like they want to continue the carry trade because from the intervention, we haven't done that. So, this is a carry trade. This is what the market needs to do with this, because if the market puts $1 billion into selling the yen, it's going to make money just for doing that. That's what it always does. That's what it always has done, unless the economics are different. What we don't know at the moment is if the economics are possible for the Japanese to do an intervention or not. You've got a contraction happening at the moment. We've got symmetrical triangle forming. So what we are doing is contracting, and you can only contract for so far before someone presses a button. So who knows? Jim, in Jan we call new members them turkeys. Yeah, it's annoying, but it's part of life. It happens every January. We have a thing in our gym. It's kind of a fitness festival thing they do every year, and it's meant to be for non-members so they can come and try the gym out and try the classes out, all that sort of stuff. What it ends up being is all of us regulars just going in and booking all the slots. But there's so many new people come in, it's just ridiculous. It's like you walk into the gym and it's like, I don't know any of you. Normally I know everybody in here. It's very weird, but anyway, it's just frustrating trying to get into the gym. But that's January. February, be fine. Everyone's doing dry January. I'm doing dry January this year as well. So no alcohol. At the moment, hands are flat. Haven't got the shakes yet. That's always good. Right. Tried Google but can't decipher your British accent. Hence the word sites. Edgeful. F-U-L-L. Edge. I'll do it. Look. Edgeful. But please don't spend too much time on it. It's rubbish. Yeah. All these reviews, yeah, are people going, it's amazing. It told me to go long and I went long and I made money. And they review that. Yeah. All this does is, let me just log in. I mean, there's nothing wrong with it. I say it's rubbish. It's not rubbish. It's really, really, really good. Yeah. It's really good at what it does, which is give you statistics, right? I can tell you that 33% of 15-minute opening range breakouts are clean breaks. Yeah, that's great. So 33%, I've got an edge of 33%, which is fantastic. You stick a 3R plus risk reward on that, bingo, you're making money. Curious how it works. It just gives you statistics. Yeah. So in the last 6 months on the SPY, yeah, the gap fill has been filled 64% of the time. Totally useless information. How are you going to use that? How are you going to use that information 64% of the time? So there's an edge there above 50%. So if you get in with a 1-to-1 risk reward ratio on a trade, 64% of the time you'll be right. You're going to make money, guaranteed. How do you get in? When do you get in? When is the gap going to fill? Yeah, the gap is that, right? So what it's saying is 64% of the time, the market will move up and fill that gap. Which day is it going to do it? And is it going to do it 3 weeks later? Is it going to do it today? Will it do it tomorrow? So when are you going to press the buy button? right now when the gap forms, and how much heat are you going to take before it gets there? Are you going to put a stop loss in? Are you not going to put a stop loss in? How far should your stop loss be? Absolutely useless, that information. Doesn't give you any help whatsoever. And every single one of these edges does the same thing. Yeah. So in forex, I want to find out what the FOMC performance. That's a useless one. Let's look at a scalping one. There are some good ones in here, and this is what I'm going to go through tomorrow in the members session. But so average consecutive bars in forex on the Aussie US in a day is 7.48, right? So what this is saying is on the 5-minute time frame, on average, on the Aussie US, at some point in the day, it will move like this, and on average, it will go 7 bars, 7.5 bars in one direction. The maximum bull bars we've ever had is 14, and the maximum bear bars we've ever had is 14. So what do you do with that information? Do you buy it when there's 14 of them? Do you sell it when there's 14 of them? Do you do it when there's 7 of them? If so, where do you put your stop loss? Now, just because something on average has 7 bars in one direction, yeah, meaning I'm going to sell it now, where do you put your stop? There? What if it goes like that for another 7 bars? That does not help you. Yeah, statistics, edges in the market are not formed by statistics like this. People ask me all the time, what is the strike rate on the market reversal alerts indicator? It's 100%. Because this indicator draws a block when there is a reversal 100% of the time. No. What's the strike rate on it being successful? Well, where are you placing your... So there's your entry. Where are you placing your stop loss? There? If that's the case, I don't know. But whether it does that or that is what creates your strike rate, whether it makes you a successful, profitable trader. If you get into a trade there and place a stop there and your target is here, this has not worked yet. If this collapses down to there and takes out your stop loss, it's 100% loss. If your target is here, it's hit target and it's a win. So the fact that this drew a block and the fact that it drew an arrow and it gave you a W pattern reversal has nothing to do with strike rate. The statistics on here have nothing to do with strike rate. This gives you rough information, but you need to apply a strategy around this to buy it or sell it. This is the bit no one can do. Yeah, you can't make a strategy around it. You can make a strategy around it, but what you've got to do is now build an EA, back test it, robustness test it, and yeah. So on its own, what it is information overload. Yeah, absolute information overload. That's all it does, is it just gives you a load of stuff. There's one in here. Fib levels I was looking at. Yeah. I mean, to work out what you do with this, like, if it opens between 38 and 23, which it has done 10 times in the last 6 months, if this is price opening the next day within those ranges, what it will do is it will give you the statistics on how often the other levels get hit. That doesn't help you, because I can say with 90% certainty it will hit the 38.2 level. But what did it do on its way there? If it went from my entry straight to it, that is an amazing edge. But what it probably did was that for 3 days and then went up there. Brilliant. How do you get in? There's no strategy here. It's just statistics. And admittedly, yeah, it's good for some statistics, but fair value gaps. mitigated. 66% of fair value gaps get mitigated. No shit. Look at them all. Look at all these mitigated ones. Look at that unmitigated one. Look at all these unmitigated ones. But this right here was a propulsion gap, fair value, whatever you want to call it. It's a gap in the market with a large bank order, right? So you saw that and you said, right, there's a 68% probability that's going to get hit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 days later, it did. But where did you get in? And what if it had been one of the 38% that doesn't get mitigated like that? What if that never gets mitigated? So you've seen that. There's a 68% chance this is going to get hit. When? See how useless the information is. Statistics do not help you formulate strategies like this. You can't use the information. And this is what I found. I went through virtually every page on here. Yeah. Looking for things I could find. Like 99% of gaps in the Aussie US dollar daily are filled. Yeah, that's because forex doesn't gap. It's just useless information. But you will go off and try and find ways to trade this stuff. You know, it just doesn't work. But there are a few edges in here which are good. So we're going to cover those tomorrow. And I'm going to build models out for them to test. So that's what the next week of member streams is going to be, is using the edges that are useful to develop and robustness test them. 72% of the time, the Aussie dollar US dollar has hit the previous week's low. So what do? On Monday, sell, hoping it's going to hit it. Stop out. On Tuesday, sell, hoping it's going to hit it. Stop out. On Wednesday, sell. Now we've got a hell of a long way to go. 72% chance it's going to hit it. What if that's the week where 36% didn't hit it? You just taken 5% loss on your account or whatever, haven't you? Yeah, it's not useful. You could use it to say there's a 72% chance it's going to go short. So my bias is short this week. Stay short as long as you like, but it can still go up. It's just a statistic, you know, and it doesn't help you. But I mean, go and find, if you can find a way, any of you guys, if you want to use this, go and, I think you do a free trial on it. Sign up, see if you can find me an edge that works. I just couldn't. I mean, maybe it's just me. Maybe I'm just, you know, the Asian range breakout, 81. You know, this is, again, the Asian range breakout is one of the oldest tricks in the book. There's so many people blogging stuff, courses on this strategy. It doesn't work. I've proved it. I've built an EA to test all variations of the Asian breakout strategy, and they all have a zero-sum edge. They come back to 0% gain at the end because the long-term edge isn't there. There is an edge here, but unless you get your entry exactly right, it doesn't work. It just doesn't work because you get chopped to death. On those days you get chopped to death, you die. It gives all your profit back. So, but you can test it over multiple periods of time. There's all sorts of stuff you can do with it. But there's a couple of goodies in here, so we'll look at those tomorrow. But you know, I'm just and again, Asian range. I've said this many times in the live rooms before. Forex doesn't have an open. So if you define that as the Asian range and the market decides it's not going to move for 2 hours, there's a very high probability you're just going to get chopped around for 2 hours, lose a load of cash before the market decides to go. By that time, you need a 5R just to get yourself back to break even. That's why it doesn't work. But if you can find edges with it, you know, I'm all ears. But, you know, statistics on their own without risk reward wrapped around them are just statistics. I can tell you how many days it's cloudy. If you walk out without an umbrella on that one day the sun's out and it rains, you know, it's what it's all about, isn't it? Statistics are good until they're not. And it's the same as everything in trading. A strategy works well until it doesn't. Martingale, somebody contacted me about Martingale at the weekend. They bought an EA off the marketplace and they've just blown their account with it. And I said, what was it? And it was martingale strategy. I said, well, martingale is a gambling strategy. It's used on blackjack and roulette. Yeah, it doesn't work in trading, because in trading, a strategy like martingale will work 80% of the time. The 20% of the time it doesn't, it will blow the account. It's the 80-20 rule. Yeah, if you get in when it does that with martingale, great. If you get in with that when it does martingale, you're dead. I mean, I don't know what the strategy is. I'm making something up, but you know, that's basically the way it works. And it's the same with all of these edges. You can't wrap a risk reward around them very well. But anything that is based on individual daily movement, that's what I'm interested in. So that's what we're going to cover. But I will update you on that tomorrow. Right, that's all I got today. Anything else you want to discuss, let me know. I'll be in Discord or Telegram. Back on Wednesday. So live rooms are back to normal now. We are Monday, Tuesday, Wednesday, Thursday, Friday as usual. So Tuesdays and Thursdays member sessions, Wednesdays, Fridays and Mondays, and Wednesdays is the 2:30 New York session. I'm probably going to trade futures as well as, I'm not sure yet. I'm not sure if I actually want to trade my funded account on stream or not. I haven't decided, but it's very similar strategy anyway. But so Wednesdays is the afternoon session. But yeah, that's about it really. Still short on FTSE. DAX is going nowhere today. So we're 1.5 hours in. So you can say with a 90% accuracy, the high or the low of the day is now formed. So it's either going to go that way or that way, pretty sure. But short on the FTSE. So hopefully we don't start the week off with a double hedge. But anyway, we'll see. A few people have asked me to trade ORB rather than SIH in the live rooms. Because it's more fun. I get the fun bit. The reason I trade this and I like this is because it's a single entry every day and that's it. I don't have to watch it. I don't have to do anything. I do have to watch it, but I don't have to sort of monitor it as closely. With the ORB strategy, it obviously takes multiple trades depending on what happens with the initial opening range break. So some people have asked me if I could trade the ORB strategy because they want to trade ORB. So what I might do is set another account up. Probably, I mean, it would be with smaller risk because I don't like the strategy as much personally. But what I might do is set the account up, another account up to trade ORB as well. Which is why I'm kind of considering not trading the futures on Wednesdays, because obviously I don't want to overdo the same markets basically. So I got funded, for those of you who don't know, I did post it in Discord, but I got funded with Top Step over the Christmas period, just before Christmas. God, that was a long time ago. On the 20th I got my funded account. So I don't really spend a lot of time on prop, as you know, but I wanted something to do over the Christmas period, and yeah, it's good. Got funded. So I've got enough to take a payout, but I'm not going to, because you only can take 50% of it on your until 30 days are up. So I've passed the 5 days $200 profit minimum to get a payout, but I'm probably not going to take a payout on it. So what I might do is set up some more evaluations to trade, but I'm still deciding. But if you want to see futures, let me know, because I know a lot of people are interested in prop, and especially the US guys who can't do hedging, and that's one of the reasons they've asked me about hedging, about using ORB. All right, so yeah, that's it for today. Anything you need, let me know. But this week is all about just let the market get going and let it decide which way it's going to go. Yeah, and just give it time to form, basically, because it's all new, first day back, everything's reset. So it's just a case of let's see where they're going to start moving to. let the market structure start to build, and then we'll see where we go from there. But as you can see, like I said, ADRs, they're all going to get hit because the ranges are all very low. So don't pay too much of attention to ADR strategy this week. All right, have a good one. If you're in the member streams tomorrow, I will see you there. If not, hopefully I will see you on Wednesday. If not, we're back on Friday morning for the next normal stream. Have a good day. I'm in Discord if you need me. Other than that, I will see you next time.